You ever wonder why the government bails out big banking but not you? Here's a concept: privatizing profits but socializing losses. This refers to a practice of treating company earnings as the rightful property of shareholders, but company losses as a responsibility that society must shoulder. In other words, the profitability of corporations is strictly for the benefit of those shareholders or people with money. But when the companies fail, the fallout, the losses, the recovery, well, then it's the responsibility of the general public. Defenders of this concept justify the practice by stating that usually these companies are just too big to fail. However, if you've been paying attention to the news, a perfect example of that logic, how that logic is incorrect, is the current situation with SVB. If you haven't been paying attention to the news and don't know what SVB is, here's a quick update. 1. Banks buy up cheap securities. SVB and other banks invested billions in what usually are pretty reliable government bonds when the interest rate was near zero. So then the deposits balloon. SVB deposits increased from 62 billion to 198 billion from the end of 2019 to 2022. So since booming startup companies started depositing their money at SVB, knock knock, who's there? The Fed. The Fed who? The Fed were raising the interest rate to combat inflation. By the way, this is your fault, poor people, for all the money you used during COVID and all those government checks that supposedly caused inflation. 4. Bond prices fell when interest rates rose, burning the value of SVB's portfolio. The portfolio was yielding an average of 1.79, but now it was way lower than the new 10-year Treasury yield that's at 3.9%. Therefore, 5, the funding dries up. Startups and venture capital funding droughts were now forced to draw funds held by SVB to fund their operations and to fund growth. And everything starts breaking down after this. The bank sat on a mountain of unrealized losses and bounds as customers started taking out more and more money. It came out that SVB started selling securities at a loss to show up its balance sheet. So SVB now sold a lot of those securities at a major loss, and it would sell another 2.25 billion in new shares. Suddenly, now there's a panic. There's a run on the banks. This creates a vicious cycle. SVB stocks plummeted 60%, dragged down other banks with it, and everyone fears another 2008. Have no worries, the FDIC to the rescue, and the Fed also help out. Even though there's a $250 cap on the FDIC, they said, screw it, you guys are covered. Meanwhile, as of March 22, 2023, the Fed just announced that it's again raising the interest rate by a margin of 25 basis points to help the war on inflation. Again, reminder, that's poor people's fault. In a recent interview with Jon Stewart and Larry Summers, Larry Summers admitted that increasing the interest rate would lead to a looser labor market. Again, the way they combat inflation is by creating unemployment. So, again, when it comes to, just remember that when it comes to privatizing profits and socializing losses, if you're not a big bag holder, the government doesn't care about you.